Hey, how's everyone doing? My name is Paul from ForexLife.me, and today I'm going to share with you my top Forex trading tips for 2020. So, if you are interested in learning my top recommendations to grow your account, to have a much healthier trading career, and to start 2020 with the right foot, stay to the end of this video. I will share a lot of useful tips. So, let's get right into it. Okay, so first, find the things that are bringing your account down. This is very important because sometimes we start to have very bad habits on trading and we don't even realize. It's almost unconscious. We start doing these small things that hurt our accounts. So the first thing we need to do is actually be aware that we should be on the look for these small things or even big things that are bringing your account down. So we will divide them in two. First, the large mistakes that destroy your account, and second, small mistakes or also dead by 1,000 cuts, okay? So large mistakes that destroy your account. Those are very common with beginner traders. When I was starting to trade Forex, I have to admit that I blow up my account a few times and more than I wish I had and lost a lot of money. So I learned from that, but that doesn't mean that you have to blow up your account. If you're starting trading Forex markets, please listen to this advice. Or if you're trading any, not only the Forex markets, listen to this as advice. It's very important. First, over leverage. Don't over leverage, please. Over leverage is when you trade with a very big position size and suddenly with 1, 2, or 3 trades your account is down 70%, 80%, 90%, and it's very, very difficult to go back to your initial amount. So please don't over leverage. Use conscious position sizing, and it's better to leave another day to trade more and don't over leverage. The next one is overtrading. When you have been trading and things have been going bad for you and your trades are not going good and you're losing some money, we start to feel this urge to get revenge from the markets. We start to feel like, okay, in this trade I will get back my money, and it doesn't work, and that's because you feel psychologically pressure and you are not like in your best possible mindset to trade. So don't overtrade. If things don't go right, just get out, have summer, and you can go back tomorrow or the next week or whatever with a fresh mind. Don't overtrade. And the next one is not using stop losses. If you are not using stop losses, stop doing that. It's very important to use stop losses, even if they are just far away protective stop losses. Use them and honor them. Don't use mental stop losses. Just put a stop loss that is sensible to your position size, that is sensible to your strategy, and just respect it. Don't take it for granted. This is a very important recommendation, especially if you are a beginner trader. Please take advantage of these 3 tips. They will save your life more than one time. I mean, they will save your life all the time. So please do these things right now if you are not. Okay, and now let's speak about small mistakes or dead by 1,000 cuts. Once you are, let's say you pass the beginner trader phase and you start to become more of an intermediate trade, then your habits become much more important, because you will start to do a lot of little things that, if you analyze, are very bad. So first you need to get rid of bad habits. You have to think of trading a little bit as if you were like a elite athlete, or if you were like a military, or you were a top musician or high income professionals. All these people need to have a very specific mindset. They have to be very professional. They have to take very seriously what they're doing. Trading sometimes feel like a game, but you have to think that this is a very serious thing. Even if you are just risking a very small amount of money, every time you win some money, that means somebody is losing. So nobody wants to lose. So you're fighting against big corporations, professional traders, algorithms, bots, trading firms. Everything is against you. So it's very important that you take it very seriously and you try to have a mindset of high performance, a mindset of an elite trader, which means that you have to actually have like a very consistent approach to the markets and don't let yourself be fooled by your own emotions. Okay, So let's take a little example on how this can affect our trading. Let's say this is our journal for a week of trading, and let's say we did 6 trades. And in these 6 trades, we took 3 winning trades and 3 losing trades. So in the end, we ended up the week with 0. If that's your case and you are like in the range of break-even traders, that's very good. That means that you are very close to become a profitable trader. You only need to fix a few things that I will tell you about in this video. But hey, there's like this saying or this statistic. I don't know how true it is, but they say like 85, 95 or 97% of traders lose money. I don't know if that's true, but I'm also sure that there are very few who are also like break-even traders. So if you are here, you have to take a lot of attention on how are your small habits. What are you doing exactly? How are you entering your trades? Remember to make a journal, to have a lot of accountability so you know and you can analyze your decisions. So let's say after watching one of my videos or reading my book or whatever, you have like a better understanding, and instead of 6 trades, you take one more trade, which means instead of 6 you will have 7 trades, and let's say that trade gave you an extra $20. I mean an extra 20 pips, which in this case with one lot will be $200. So in the end you will finish the week with $200, which is very good. But there's another way to become a better trader without actually changing anything from the way you trade right now, only by observing the way you trade and improving yourself. And that is the next scenario. Let's say that instead of 7 trades, you only do 5. But because you didn't do 6, because you were a little bit more hesitant, you took your time, you had more patience, you were looking for a better setup, you didn't rush your trades, and you enter in a better position. And let's say that once actually you decided not to take a trade, so instead of 6 you take only 5. But you take 5 trades, but from those 5 trades you win 3 and lose 2, which means that in the end you will have also $200 of green in your account. So this is something you have to look for. Like if you analyze your trades and you find your habits, are you really entering when you have to enter the market? Are you rushing to enter trades that you shouldn't? So that's very important, and please take into consideration that it's not only about how many trades you enter, but the quality of the trades. You can trade less, you can trade with more conscious approach and make more money, and that will also help you because there won't be so many fees and the spreads and everything that comes, all the costs of trading. Okay, so in this case, it's very important to understand that avoid equals win. Sometimes to step back and to avoid trading, it's the same as if you were winning more trades. So take this into consideration. Avoid sometimes equal winning in trading. Okay, so let's speak about the money killers. The money killers first. Avoid trading untested strategies or indicators. This is a very classic mistake. It happened to all of us. We read about a new technique that somebody is using, or we hear a podcast, or we watch a video on YouTube, or we read a blog post or whatever, and we feel very compelled to try this new strategy or this new approach or this new indicator, and suddenly it seems that it's like the holy grail, and after using this we will become like millionaires in 1 week. And of course that's not true. Please always avoid trading untested strategies or indicators. If there's something you are interested in and you find that it can be adapted to your thought, to your psychology, and to your way of trading, just test it. Go demo first. Please always go demo first. Try it for a couple of months, and if it's a good strategy, it will work today and in 2 months and in 2 years. So please give it some time. And also because sometimes we rush to try something new and we don't really understand it and we lose money, so we feel discouraged, and in the end it was maybe not the fault of this new strategy, but because we didn't really understand how it worked. That's why we actually were losing. So please, just if you want to try something, please try the demo first and understand it thoroughly, fully, in different market conditions, because before applying it to real money. Okay, the next money killer: stop trading for emotional reasons. That's a huge subject, as you might know, and we will just speak about two very specific things in this very important subject. As we spoke before, we should be trying to become our best in trading. We should try to become elite traders to perform the best we can, and for that we need to first avoid at all costs the FOMO. FOMO means fear of missing out. Maybe you just open your trading terminal and you see that if you would have opened your terminal like half an hour ago, you would have the perfect setup. You would have entered in the perfect moment. But right now the market has gone in the direction you expected, but for more than it would be good for you to enter. Let's say it's gone already 60 pips. It's not worth it anymore. I know it feels like it's a lot of psychological pressure when we see that we could have been there, and it's just another proof that our system works, but we just weren't there at the right moment, and we feel very compelled to enter the trade even if it's not the perfect moment. And please just don't do it. Avoid that. It doesn't matter if you miss the trade. There will be another trade later, tomorrow. Sometimes the market will just go back to test the same level again, and you will have another chance to enter. And if it doesn't, don't worry. Tomorrow or later or the next week, there will be another opportunity. The market is always giving you new opportunities. So if you don't have the perfect or nearly, let's say nearly perfect setup, just don't enter. Just watch it and say, oh, look, my system works. Next time I will take the trade and I will make money. It's better not to lose than to just force a trade that you shouldn't be making. Okay, so the next one is exiting without a reason. That happened to me a lot when I was, let's say, moving from intermediate to an advanced trader. I already had my setups right, I already had my analysis right, I already had my position sizes, my stop losses, everything was correct. So I entered the trade and normally it will go in my direction very quickly. But I start to feel this urge to just secure my profits. You see, I know I was, I don't know, winning like, let's say $200 or $300, and I would say, okay, so there if I just go out now, it will be better because I won't be risking any money, and then I will just go out, and after that the market will just move in. If I would have stayed, instead of $200 or $300, I will win, I don't know, $1,500 or $2,000 or whatever. And also when you enter a trade and the trade starts to go against you, but didn't hit your stop loss, it's the same. Sometimes you enter a trade and it starts going against you, and you start to feel this urge to say, no, I shouldn't have entered this trade. No. And it's just a feeling. There's no real reason, because your setup is there, your rules are there, and everything is there, but the market is just moving against you. Doesn't matter. Respect your stop loss. Let the trade unfold. It doesn't matter if you're winning a little or losing a little. Just let the trade continue, because that's the only way that in the long run you will be able to actually beat the market. And the last one of these three money killers is don't trade without a money management plan. This is a very, very, very important one. And this is one that also separates like a novice or amateur or even experienced trader, but this separates professionals, like real people trading millions in the hedge funds or in the trading firms, from just amateur traders. So I will give you, because this is very, very, very important, I will give you like just like an example of a money management plan. Okay, so you have to make a money management plan that is sensible for your own trading style, for your account size, for the time you can invest into trading, and for everything that has to do with you. This is just a sample, okay? This is just a sample, but it's important for you to understand that you shouldn't trade without a money management plan. So I will show you just like a sample money management plan. So let's say I have $10,000 to start trading. So I say, okay, from this $10,000, I have to be very sensitive. I don't want to risk my money unnecessarily. I want to detect the moments when my psychology is not right for trading. So I will put very strict rules that I will follow 100% no matter what. So let's say my first rule is I will not lose more than $500 in any trading day, which is, let's say, like around 5% of my account. That's the most I am willing to risk every trading day. So whenever my losses go above 500, I will just close my terminal and do something else, or analyze my trades, or go to make exercise, or whatever I need to do. But if I get to the $500 point, I will stop trading. That is very good, because that will allow you to avoid the things that we spoke in the beginning, which are over leveraging, over trading, all these feelings that are very, very, very disastrous for your account. So in this sample money management plan, if I lose more than $500 in one trading day, I will stop trading. So let's say that my next rule is don't lose more than 1,000 in any trading week. So it's just the same, just made for a week. Let's say that the most that I will risk in any given week is 10% of my account. So if things are going wrong, and let's say on Wednesday I already lost $1,000, I will say, okay, this is too much pressure psychologically. I will just close my terminal. I will start analyzing what happened. I will just give me a few days to cool down, to let things just relaxing my mind, so I can really understand what happened. Why, if my trading strategy is right, why am I losing money? Am I doing something wrong? But I don't want to keep risking more and more and more and more money when I can clearly see that my tradings are not going right. Maybe the market conditions are not right, whatever, but I just don't want to keep risking money. So just it's very important to respect these rules. The next rule is don't risk more than $250 per trade. So okay, I say the most that I am willing to risk is, like, let's say, like 2.5% of my account. And so that's very important, because when you set like a specific amount to risk per trade, that will stop you from over leveraging. Because I don't know, if you have like an interesting setup and you normally trade with one lot and your normal step loss is around 20 pips, and there's this very cool setup, but you see that it's 40 pips away, then the only thing you can do is either not enter the trade, or two, instead of entering with one lot, full lot, you enter with half a lot, and then you will be risking the same amount of money, although you will give it the amount of pips that it needs. It's more important to understand that trading is not about pips, but more about percentages, right? Because if you just win 1,000 pips but your position size is too small, then it doesn't really affect your account. So it's more important to think in your trading plans more in percentage wise and not so much in pip wise. Okay, so these are very simple rules, but trust me, this is the way that professional traders trade in the trading firm. So do your own money management plan according to your own way of trading. And please, always adjust to the market conditions. Learn that the markets are not every day reacting the same. Sometimes you have important news coming, or you have, like right now that we're on holiday, so the markets can be very slow or very thin, or maybe they won't respect support and resistance. Let's say, I don't know, you normally trade the euro dollar that has a specific volatility, and suddenly you move to the Great Britain pound against the yen that has like double the volatility. So if you normally were used to risk 30 pips, this time you will risk something like around 60 pips for the same trade. So take that into consideration, that trading is not always the same. There's markets change. I don't know, if there's this support that has been holding for 10 years and suddenly the market breaks it, well, it broke. Adapt to what the market is doing. That doesn't mean break your rules. On the contrary, that means use your rules, but understand that the markets are always fluctuating, always moving, always changing, and you need to adapt to them. Trade with a stop loss. I said this already, but I will say it again, because I know even professional traders sometimes trade with mental stop losses. That only works if you are working or if you are trading with very small positions, because that's the only way that mental stop loss would work. But even in that situation, I would say, please at least put a stop loss far away, because you never know when there's going to be like a black swan event and suddenly the market will go wildly in one direction or the other, and suddenly you can be wiped. And we don't want that. We don't want that. We want to have money to trade another day, to live another day, and to stay in the markets, because we live from the profits of many, many, many trades, not from one trade. So just the important thing is to stay in the game. So always trade with a stop loss. And also have a clear strategy to let your winners run. Like, this is like the other side of the coin. We as traders normally do hits, like you want to do small hits, like maybe you win 20 but you lose 10, or you win 40 but lose 20, and you want to be winning 60 and losing 20. You want to be like always winning a little bit more than what you lose, right? Sometimes you will have break-even days, and then the next day you lose a little bit, and the other day you win a little, and then but suddenly, if you trade right, there will be these moments when you are exactly in the right moment at the right time, and you just happen to take the perfect moment for your trade, and you don't want to miss those opportunities. Maybe if you normally win 20 or 40 or 60 pips in your trades, you have to take into consideration that sometimes market will move for 400 pips, and if you are in the right moment at the right time, why wouldn't you find a way to take advantage of this? You have to think a way to just let your winners run. That will definitely impact your account in the long run, because with the normal trades, maybe you will be ahead a little bit every month or every week or whatever. But if you have one home run a month, that can easily double your profits for the month, or triple, or whatever, depends on the home run. So please try to find a way in your own style that lets some of your winners run. So I will show you just like a sample. This is a strategy to capture bigger moves. So let's say that you are trading. This is the euro dollar today. These are hourly candles, and let's say that you have this support, the green line, and then suddenly the price was here. You were looking at the markets here, and according to your strategy, this is a good place to take a long trade. And so you say, okay, I will open a long trade, and then suddenly you have your stop loss and everything in place, and you say, okay, so my take profit should be somewhere around here, which is 30 pips. So markets start moving, and suddenly, wow, the market is right there, and very quickly you hit your take profit, and that's of course very, very, very good, because you won 30 pips. Let's say that you have one lot, and that will be $300, which is of course very cool. But right after you hit your take profit, the market retraces a little bit and then just goes in your direction for a massive move. So what do you do? Should you just be okay with the fact that you made 30 pips? Well, I will show you like a very classic way to deal with this kind of situation. So let's say you have one lot. Well, at your first take profit point, which is the lighter green line, you will take half of your position at 30 pips, and you will have this very cool profit, and then you will leave half of your position to run. Maybe you will move your stop loss to break even, so now you are not only in the green for the money you already made, but you are not risking any more money. If the markets just move down to your stop loss, that is fine. You already made some money and you're not risking anymore. So how can you manage it? Maybe you can trail every resistance point, or you can to the next exit at the next resistance line, or whatever your strategy is, but you have at least a portion of your trade ready to just let it run if the price go into your direction. So in this situation, let's say instead of making $300, maybe you would make 1,000 or whatever, or 900, or depends where you exit. So this is like, with one trade is a little bit like you made 3 good trades, or 4, or however many trades that you can extract money from the markets. So it's important to find a way to just let your winners run. Okay, so these are my main tips. So please write down a step-by-step plan. This is very important. I gave you samples. I gave you some guidelines to write your plans and to find like how you should do it. So just adapt it to your own trading style and write your plan to manage your money. Where should you put your stop losses? How much are you going to risk? Where how the position size? How are you going to split when you find your first target? If you are going to let your winners run, all of this, just try to make a written plan from all of it, and of course follow it rigorously. This is super important, because if you don't do it, then you will never know if the plan works, because if you are breaking your own rules all the time, you will never know if it was you the reason why your plans didn't work, or if it was the plan itself. So do your step-by-step plan and stick to it. And of course, very important, track it. It's very important to have a trading journal, so you can just understand what is happening trade by trade. I normally have like a written journal, like on an Excel sheet or something, but I also do videos, like live videos for every trade I take, so I can go back and rewatch, and I also explain verbally what I am doing, why am I taking the trades, so I can just go back and understand how I was feeling, if I was on stress, if I was understanding the markets right, what I was thinking, why did I decide to take a trade or another, or why I decided to exit a trade, or how things unfolded, so I can learn from my mistakes and also from the good things that I do and from my good trades. It's very important that you can learn from your mistakes and also from your victories. So at least have a written plan, and if you can do as I do, and have a written a written journal and also a video journal of your trades. Okay, so if you right now you're a beginner trader or an intermediate trader and you haven't found a strategy that works, you can download my book on Amazon. The name is The Black Book of Forex Trading, and in this book I will give you very simple strategies, very simple tactics to start really looking at the markets with an edge. These are very, very easy to follow strategies. I think anyone can actually start making some money from the markets by following them. If you want to start to know more about trading and to start actually moving from being like a losing trader to a profitable trader, then I will definitely recommend you to download my book. The Black Book of Forex Trading is very cheap. It's on Amazon. You can just go right now and download it. And also you should visit my blog, forexlife.me. I have a free video training on trading. You can just enter your email and you will have access to 3 long videos where I explain a lot on how to trade, and just like very hands-on. Please leave a comment, subscribe to my channel. I want to have a lot of interesting tips, trading strategies for you in the future, so you should definitely subscribe to my channel. Give a like if you like the video, comment if you have any question, if you want to say something that you think that it's important that I didn't say or whatever. Please comment down below, and I wish you a very, very profitable 2020, and I hope to hear from you very soon, and I see you on my next video.